Hello, traders out there in Traderland. My name's Dez here at Grok Trade on Tuesday, May 22nd, 2012. Stocks in the day. Mixed, we have the Dow break even, the S&P up a fraction, NASDAQ down 0.3%, Russell down 0.7%, you have the banks down 0.3%, VIX up 2%, fear indicator on the rise. Gold, silver, crude oil, all commodities crushed again. Last time we've seen them get hit this bad was in 2007, right before the 2008 market correction, which was a deep recession. The gold down 1.7%, silver down 1.2%, the crude oil down nearly 2%, US dollar rallying 1%. People fleeing to a safer sector, a defensive sector, utility sector up 0.5%. And taking a look here, an intraday chart, it's an hourly chart that we were talking about pre-market this morning, about a rising wedge to be wary of. Rising wedge dropped and dropped down below it. The problem with this is now that you have a broken rising wedge, you usually get a little pop up because people see this as a bear or a bull pullback and buy this. It'll go up, it'll go so high and then drop again. It will hit, usually what it will do is come up and kiss this and then drop. They call it the kiss of death. They come up, kiss, and dive. That will give us a double top right here. And with 200 moving average comes across. So you come up, touch, drop, come up, touch, drop, giving us a big M, if you could see that with what I'm doing with my mouse there. But let's go to the S&P daily chart and talk about what's taking place here. Now, a couple things here. Massive drop. Things that drop fast tend to rally fast, right? Well, yesterday we had a huge rally in the market. We needed that because the day before we actually closed below a major support line. When we closed below that, bad things were going to happen or could happen. We rallied back just in the nick of time. However, we get a doji day. We rallied higher, busted through a lot of resistance areas, but we settled back down with the doji. There's indecision. This is problematic because the next leg down could be a nasty one. Let's go over here to the weekly chart. Every bar is a week. We come up, 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 hit our head. We drop. We come up, kiss of death. We drop. There's our M for murder, double top trend reversal pattern. We come down. We snap a major weekly trend line. This goes way back, gang. Right here, support or resistance. Resistance, resistance should be support. But instead, we broke through it last week. This week, we're rallying back high. But I just think this is an overlapping candlestick. I could very easily see a big red one right here by the end of the week. And if we do see that, the momentum and the velocity of the drop could just continue on down. It could be a bloody next couple weeks. So that's something we're looking at as a possibility. The other thing that we have going on here is this rising wedge on the monthly chart. So we have this higher swing high, higher swing lows, but the problem is it put us right onto a rising wedge, and this thing could start dropping and then break down. If it does start breaking down, we could have another multi-year drop off here. I'm not trying to scare anybody, and I'm not a perma bear by any means. Matter of fact, I've been bullish going into this, but I'm probably, I'd say 80% cash right now, sitting through this with a few longs. But I have stop losses on them. If we start to drop down any more, I want out of this mess. But on the daily chart, if we do start to rally higher, I want to be able to pick up some money off of this little pop that we're getting here. Let's take a look at Facebook. And before we do, hey, a shout out to Mark the Meerkat Suffering, who came in, stood in for me for the weekend edition video and also the Stock Picks V newsletter. Thank you, Mark. And for Matt Ratliff, the Amber Crombie and Fitch supermodel, who is now our futures analyst. Thank you very much for coming in and doing my afternoon post-market videos. Much appreciated. Facebook, a lot of valuation talk about Facebook, but I don't get tied up with the hype. News will never make us money. What will make us money is looking at the technicals, and the one thing that I'm looking at is the drop or the velocity of this drop. This could turn into a very nice bull pullback. So for all you Grok graduates out there, you know we have 8 rules for a bull pullback. Be watching this very closely for that, because money management, risk management, our risk to reward ratios are all intact. So just keep this in mind if the markets start to go bullish. Let's also take a look here at gold. Now gold drop, pop, had a doji. We have now dropped. On the daily chart, we did rally to the 50% Fibonacci area, but now we're making a down leg. The next leg could be a dandy to the downside. We had a few days of a pop. All this is a bear pullback, and this is a better short-term short than it is a long. However, if I go to the weekly chart on gold, we're at a major support area coming across right here. This could become a double bottom, a W for winner, or W for wow, or W for wonderful, and you get a nice rally in gold commencing here. And then on the monthly chart, we are below a major trend line, finding support right now at the rising 20-month moving average. If the markets do rally, it needs to rally back like a machine to get above this huge support line. If it doesn't do that, stick a fork in gold and most all commodities, because it's going to be in trouble. Take a look at Apple. Apple's in a lot of trouble. Resistance, crash. Resistance, crash. Resistance, So we're at a major resistance line on the daily chart. Dell just missed earnings and estimates today, and that could be a catalyst to see another drop for Apple. So if you're holding Apple long right now, be looking for an opportunity to get out of that. Now, there is talk here, at least in my camp, that this could be a good old-fashioned bull flag. You can see it right here. So if I draw a Fibonacci down here from the very low to the very high, you can see that we're hanging up at 38.2. So that is a major possibility that this, instead of being a downtrend and start breaking down, that this actually could be a major bull flag, and this could have a huge rally. Usually on bull flags, whatever leg that the bull flag developed on, the size of it, expect about 80% of it right here. Textbooks will tell you 100%. I'm telling you 80% right here on a breakout. Anyway, that's it for now. If you haven't watched Matt Ratliff's futures videos, make sure you go and watch his videos. And if you are a stock trader, make sure you watch Mark, especially if you're a day trader, watch Mark's videos on the stock side. And if you speak Spanish or know anybody that speaks Spanish, make sure that they're watching Nitz's and Miguel's videos each day. Spread the word. And we have a mentorship coming up in Vegas. I'd love to meet you and any other traders face to face and personally. We only do this once or twice a year at the last week of June. If you'd like to be a part of us and team up and go through a mentorship and learn how to trade and be part of a growing and educated community, a healthy community of developing traders, you have found it. Because every trader comes to the road of either stopping their trading habit because it's a gambling habit, or getting more formalized trading education. We hope that you choose getting more formalized trading education, and we trust that you'll choose us. Take care and very safe trading to each and every one of you.